My name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Sales International Limited. And here's your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. An indecisive spinning top yesterday and possible, very small, bearish harami, though that is very much an ask to call it as such a thing. The reason the indecisive pattern formed at the top of the recent market is very simple, and something I pointed out yesterday. We had a crossover of the neckline of the January to February reverse head and shoulders continuation pattern, currently at 121.16, and the 2021 downtrend, currently 121.13. This effectively capped the market. Below we have the flatlining medium moving average, currently 120.54, with some light congestion in the 120.33 area, and then nothing until the 50% Fibonacci line at 119.75, and also the flatlining short medium moving average at 119.66 currently. Meanwhile, above the crossover we have the old March 2018 low at 121.52. So far today, an uninspiring move lower away from the crossover. Well, please be aware the two trend lines separate from each other from now onwards, and their combined resistance will diminish in value accordingly over time, though the market seems to be more interested in challenging the medium moving average right now. Cable, aka sterling against the US dollar. A second bullish white soldier yesterday, and a small follow-on to the previous session's reactionary bullish harami. This time prices were anchored on the flatlining and recently lightweight short medium moving average, currently at 138.72. Overall, we're still well within the June to September 2020 bullish shift pitch hawk, the lower time below, currently at 137.26, and the middle time above, currently at 141.92. Please remember, this pitch hawk has given the bullish angle of attack of this market since September last year. One final point. The lower time continues to be partnered with the rising medium moving average, currently at 137.46, which has been an effective barrier these recent weeks. So far today, a small pullback down through the lightweight short medium moving average, but no more than that. Euro sterling. A possible bearish dark cloud cover pattern yesterday as the market peaked up to 87.19 and retreated back down. One trading session too late to make a weekly key reversal pattern. I suppose one can put this move back down to the earlier highlighted highs of February and April at 87.12, 87.19 and 87.30. Meanwhile, below we have the April 2020 low as support at 86.69, and now an April based uptrend currently at 86.54, with possible aspirations to be an ascending triangle perhaps. Looking topside, we have the Spectre dropping down from above the medium moving average, currently at 87.69. Overall, and with a few days still to go, we still have the chance for a monthly key reversal for April. Prices need to close on the 30th of April either above 86.70 or below 85.10. Currently, we have moved into a possible monthly key reversal up right now, though the way the weekly key reversal up was denied last week, well, this now has a question mark over it. So far today, nothing. An indecisive spinning top, maybe even just a doji cross. Possibly we could look at a bullish dragonfly doji, if anything, for today. And still a prospect of an possible ascending triangle pattern as well. US dollar against the Indian rupee. A lower but indecisive doji cross yesterday. However, what was more important than the daily pattern was where it happened, below the rising late March to date uptrend, currently at 74.97. The uptrend on its own is not that interesting. What is interesting is that this may be the trigger for one, maybe two of the three possible scenarios I'd previously listed. They are a possible double top or an ascending triangle, both acute, and both formed over April, and an outside possibility of a bullish halfway hesitation pattern as well. This clear close below the uptrend now allows me to concentrate initially on the possible downside target X for the descending triangle in the 73.85 area. The idea of a double top will depend on whether the 50% Fibonacci on the February to April 2020 move at 74.26 holds and how it does so. As for the bullish halfway hesitation idea, well, that is still there, much like target X in the 75.80 area. That's the target for the double bottom formed over this year, though I have a suspicion that both may soon be retired. So far today, a further drop below the 50% Fibonacci line of the April 2020 to April 2021 move at 74.63, but since then a pullback up over it again. A little bit shy this one. US dollar against the Brazilian real. Bearish double yesterday as the market tried to punch through the heavy mass of support made up of the recent 50% Fibonacci line at 544.41, the medium moving average at currently 544.56, and the long moving average currently 544.28. The reason for this attempt lower was the same as last week, the move down below the recent sideways triangle. Now, one could still say this could nevertheless still be a false break lower. However, the way the market acted seems to indicate it is not, well, not just yet. Though I would like to point out one issue. Unless prices start moving below this support, and soon we may see a recoil back up. So it's a bit of caution there. So the next few days are very important for this pattern. One additional point I'd like to make, the market did manage to close below the supports, but only just. Therefore today could be quite interesting. Anyway, I once again feel obliged to indicate the potential levels below I'd spoken about last week and the beginning of this week for this sideways triangle pattern. An initial target X would be in the 541.15 area. Not that much of an ask if you think about it, whilst a full target X1 will be in the 513.80 area. Make of that one what you will, I'm just telling you what I see. Just remember, 6 out of 10 times the break on sideways triangles is on the upside. Additionally, being so far along the triangle, we have a high degree of false breaks and pullbacks as well, something like 60 to 70% of the time. So please watch carefully. US dollar against the Mexican peso. An indecisive spinning top yesterday, though some may look at it as a small bullish harami. I personally find that too much of an ask. It was the first clear open, close and range above the important early March to date downtrend currently at 1972.28. Now this puts into doubt the idea and targets I raised 3 weeks ago of, and I quote, a recent action also leaves the way open for a possible descending wedge, descending triangle or even double bottom pattern, end of quote. Already achieved the descending wedge pattern target. What we now have are two possible head and shoulders tops, one from mid-January to late March and the other from late February to early April. In the first case, we have an initial target X3 in the 1971.70 area, with full target X4 down in the 19 even area. In the second case, we have an initial target X1 in the 1950 area, with full target X2 down in the 1985.5 area. All these are now in doubt because of yesterday. The only option left is a possible realignment to a shallower angle, but I am not keen on trying to fit that into a scenario that may be changing. What that leaves us with is the idea of a possible double bottom, and that idea will depend on target X1 holding, or at any point between where we are now and where target X1 is. So far today, a seeming realization of the clear break afforded yesterday of the downtrend by the market, with a small bullish move higher. This could very well be the end of the attempt lower, but watch this space. It's still early. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.